NASDAQ and ES went up throughout lunch. And what do I teach you about time of day? Because this is the other things that you have to factor in. When do these characteristics manifest in price? Because everything is by time and price. Not price and then hope it's the right time for it to buy and sell. No, we wait for a specific time of day. After lunch, we know that the algorithm starts its PM session at 1:30 New York local time. Around 1:40 or so, I can't remember the minute marker, but it's about 1:40. We had a high form in both ES and NASDAQ. NASDAQ was unwilling to make that higher high when it was at approximately 50% of the opening range gap. So there's this divergence there. What did I tell you I favored today? The daily chart fair value gap. That's the draw. So now think for a second. Just think for a second. If you want the lion's portion of the move, that means that the market crept up after failing to run into those fair value gaps on the daily chart in the morning session. I was able to take a big chunk of that move out. Then it went up into the opening range gap, half of it. And at 1:30, the PM session starts its rotation. The market starts reaching for what? That higher time frame draw on liquidity. ES reaches down into it. What time did it get there? 3 o'clock on the dot. NASDAQ didn't do it. Didn't try to trade down as low as ES did. Why? Because you have to have intermarket relationships in your trading. If you really want to be a grand slam home run trader and you want to hold these big runners, you have to do the research and see which one are you in. Are you in the right one? Are you in the one that's likely to give you the downside? That's when we're bearish, which one is more likely to go lower? The one that's failed to go higher when it's been going up. It's the laggard. And the one that's stronger when it's been going up, when it's time to go down, it's going to be reluctant to go down. So if you're having a higher time frame draw on liquidity, you're balancing out what is this market's doing at the time. And I showed this to you this morning by being in both of them at the same time short. And when there's warning signs that it's not cooperating with you and your trade idea, kill it. I'm not afraid of being wrong. What mentor out there is able to do that? Show you executions and explain to you, this is what I was looking for. And it doesn't do exactly what I wanted to do, but guess what? I'm still able to show profitability. That's what you want to start with. You want to be able to do that. That's a stage in your development. But when you watch me or other people do these big runs, you think that it's something that you should be able to do right out of the bat. Right off the bat, just you watch a couple of videos, you listen to them, Jawbone, me, or someone else. You join a subscription-based idea, and you think you're just going to walk out there and do it too. And it's hard. It's very, very hard to do that consistently. I've never met anybody, and I know a lot of people that are traders and have tried trading and have been trading longer than me, and none of these motherfuckers have ever done what you're thinking you're going to be able to do. And I've already said this. If anybody was able to walk out there and do it, it would have been ICT, and I couldn't do that. It took time, working through a lot of shit, graduating through, can I trade with 2 contracts? Can I trade with 5 contracts? Can I trade with 25 contracts? Can I trade with 50 contracts? Can I trade 100 contracts? All these things are thresholds that you have to grow into. You have no idea what it feels like to have $3,500 per handle movement. Yeah, 4 ticks, $3,500. Can you just walk out there tomorrow because you mastered the 2022 mentorship playlist? Because you can condense it into 15 fucking videos? Come on. These are unrealistic things. And you're trying to do unrealistic feats. And that's what makes what you think you're learning from me is complicated. No, what you're trying to do with it is the complication. So these big runners, these big runs in the marketplace, They happen over time. So you have to know a higher time frame draw and liquidity. Where's it likely to go? You have to have intermarket relationships understood. If you're going to be an index trader, whether you trade the Dow, which I don't, whether you trade ES or don't and prefer to trade in the NASDAQ because it's faster, because it's thinner. That's why every move in the NASDAQ is much more exaggerated. And that wild ass movement is an enticement. But you might get into index trading because of what I've been teaching or someone else doing it. And then you get into NASDAQ and that shit stings your ass. That doesn't mean quit. It just means, okay, go trade ES. You can make a fuckload of money trading ES. You don't need to be in NASDAQ. I just do it because there's pony boys out there that think they understand that market and can do this and do that. And I go out there and I grab by its throat and strangle it in front of everyone. And you see it happening. You watch me execute it and manage it. But you also see me doing more than 20 handles. You also see me doing more than 5 handles. And I'm showing you how to manage and grow in that. I can go out there and do full pulls, enter at the high and get out the lows. I can do that, and I'm going to fucking do it. But you are trying to learn. So how do you graduate through that? You go in and you look for where is it likely to go? And then where in the process of where it's likely to go, where can I take partials off? So that way it rewards me and gives me more courage to hold on. Because if it returns against me and goes for my stop loss that I may have trailed up too quickly, too quick, and too fast, at least I've been paid. And it's soothing to have that experience when you're developing. All of my profitable, consistently, not even listening to me anymore because they're doing their own thing, all of my students that have gotten to that point, they're not doing partials like they first started. They don't need to. They found their model. They know what they're looking for. They know what their setups are looking for. And they're just managing it properly and just letting it go. And they're not trading every day. And they're fucking killing it. See, you think trading is this. But for you, it might be something entirely something else. And that's perfect for you. You might want to hit these grand slam home runs. But you know what? You might find out that you are a perfect 30 handle stop, get out of the trade and be done. Look for your next setup. And that's where you are highly efficient as a trader. You're managing your money properly. You're managing your mental capital properly. And you're not marrying these ideas. You're not going to be enticed to try to do a little bit more because NASDAQ batted its eyes at you and shook its ass at you. You're not trying to take them home to mom. You're just trying to have fun with them. A romp. That's it. There's no shame in it. Get your shit, get your honey, and get the fuck out of Dodge. That's all this is about. There's no shame in that, okay? There's nothing anti-Christian about going out here and making a lot of fucking money trading. You're not stealing from people. The people you took it from, they knew exactly what was going on. Everybody walks in with their hands out of their pockets with money sticking out, daring everybody, take it from me if you can. That's what this business is about. But if you go out here and you're looking around constantly, trying to do something that you're not prepared for, you're going to fail. And that little tiny failure is going to have such a huge impact. And it's going to derail you. And you'll forget about how you can consistently find 5 handles. You're going to forget that you can find 3 good trades out of the week and know when not to trade on the bad days. And that's good. You're going to beat yourself up because you tried to do something. You're trying to make an Olympic feat out of something that you're not quite ready for, but doesn't mean you're not going to get there. It just means that you're trying to do too much too soon. And many times I've seen people as YouTubers, because they have an audience or because they have a bone to pick, they have some kind of superiority complex, okay, or an ego issue or something to that effect, or they don't like me, something as stupid as that. They go out and they try to do something and they don't do it well, or they blow something that they had on their hands as a winner, or they start their live stream supposedly up and they shit themselves on the live stream. That's what goes on out there. And it's because they're trying to do more than what's necessary. You're in this business to make money. That's it. That's the only reason why you should be here. If you want to have a large audience that loves you and worships you and, and watches your YouTube, let that be a secondary thing. Because I promise you, if you stick to the first rule of trying to make money, the first and only priority, everybody will fucking flock to you. If you can do it consistently and you're not a dick about it, people will watch you. They will love you. They will absolutely watch what you're doing and have nothing bad to say. Stay in your lane. Don't talk shit about nobody else. Stick to what it is that you're doing. And I promise you, that is exactly that's what people want. If they're there to watch somebody else trade, they want to see you trade. They want to see you trade. They don't want to hear you talk about other people. Just do what it is that you're doing because they like that about you. They like what you're doing. They want to emulate you. They want to do half as much as what you're doing. You're now an influencer. So don't waste that. Don't waste the influence, the opportunity of influencing people with the right things. So you don't go in trying to trade with big positions to try to catch these long runners. You do it with small positions. And over time, you graduate with one more contract or one more lot if it's forex. And you condition yourself over time. How much time is it going to be? I don't know. It depends on what you're trying to do. But I don't want you thinking that you need to have a timeline on it or a deadline. I got to be able to catch these 100 pip or 100 handle runs by the end of this month. Because if I don't do that, I'm a failure. That's not reasonable. You think about it. That's not even practical. Every person that sets foot in this industry that has made themselves something of a success, I promise you, if they sat down with you or if they talked openly and was honest about what they did and how they got to where they were, the biggest growths in their understanding and their ability as a trader was when they slowed the fuck down and tried not to do what's beyond necessary. If you can make $25,000 a month with one contract, and that's exactly what I was doing with that TD Banner trade. I was literally talking to one of the young ladies in my mentorship who was struggling. She said, look, I can get in here. I'm using the concepts. I can make money. And then when I try to trade with more position size, I end up losing. But I don't blow the account. I just go right back down to break even. And yes, I scale down. I start back at square one and I go with one lot because she's a future trader. Going in at one contract and I'm trying to build it up. I get it up and then I go right back down to break even. And then I rush it and I go in and I try to get back what I lost and then I get into deep drawdown and then I don't know what to do. So I purposely put that account in the drawdown and I went through the process of going through the entirety of doing it with real money. Not because I was fucking obligated to any of you, but I want this young lady to do well. So she asked me sincerely. That was why I did it. It was just for her. But that one contract making $25,000 in 1 month, well, 5 weeks, but that was correcting drawdown that was put in place to show her day by day, showing her, look, this is what you do. This is what you don't do. This is what happens if you do this. She paid me. So I was obligated to her. I'm not obligated to any of you motherfuckers. Okay? I don't mean to be disrespectful, but seriously, some of you act like you fucking own me. You don't own me. You don't fucking own me. That's the dichotomy here. You have to understand that I do this because I love doing it and I want to see you succeed. But entitlement mindset, whether you think you should be able to do this faster than you are learning to do it, or that I should do more than I already am, come on, man. That's not realistic either. And there's a lot of personalities that come into this industry. And as a mentor, believe me, anybody that's listening here that's a mentor or a teacher, a guru, a salesman, or a course seller, I guarantee you have dozens of people that you wish never, ever came into your fold or ever knew your fucking name because they're just a mental drain. You can't help them. Are you that way in your trading? Because if you are, I promise you, you will never be able to hold on to these big runners because you have a lot of mental baggage. So you have to make sure you clear all that stuff before you even try to do these types of things. If you're trying to measure up to somebody else, if you're trying to be better than the other person's service, if you're trying to create a product that's better than somebody else's, all those things are going to lead you to do things that you're really not equipped to do. And you really just want to be able to chance it to see if you could do it, and then sell the idea that you do it all the time. Because as soon as you start doing it once in a while, your audience is going to say, you know what? Why aren't you doing it like you did before? Why don't you do this? Why don't you do that? That's the way social media is. You're never going to satisfy anyone. So you might as well fucking be satisfying yourself. What is the threshold? As you as a trader, where are you going to be most efficient? Efficient about your time doing it, how much time you're going to put into the charts, graduating into that, holding on to a long, big runner. That big runner, you're fucking years away from getting in with your full position and holding on for these big runners. I'm being honest with you. You are fucking years, 1,000 fucking days minimum. If you started today, counting today, day one, you're at least 1,000 days away. And I'm talking market days, not weekends too. Before you get to that point, now that doesn't mean you can't get in with one contract and get out there next week and take 100 handles down. Yeah, sure, you can do that. That's reasonable. But when you start building up these larger positions, whether it be a funded account challenge or whether it be now you're funded with a company or you're trading with real money, those things are going to be heavyweight factors on your psyche, because you're going to be constantly worrying about, did I do this right? You're going to know that you did it too soon. Guaranteed it's going to happen. You're going to feel that. You're going to feel it. And it's going to cloud your mind. You won't even be able to know when the market's telling you, I'm not going to do that. But you want it to be so badly delivered into your hands. You won't see it. You will not see it. And you'll hold on to it too long. And the worst case scenario, which is what you're trying to avoid, will actually happen. It will come back and roll against you. And that nice, big, handsome profit you had that was unrealized, and you knew you should have fucking got out, at least with a partial, you didn't do it. So now what are you doing? You're kicking yourself in the ass about that. You're not ready. You're not ready. It doesn't mean you're never going to get there. It just means that you haven't desensitized yourself. You work up into it slowly. Now, partials, and I'll say this in closing, partials are a huge, huge benefit to, number one, developing students, because it teaches proper money management and proper trade management. And it helps you grow as a trader. It helps you understand risk. It helps you navigate order flow. It teaches you liquidity and how to implement it in your trades. But the thing is, there's no perfect, I don't have it. There's no perfect way of saying, okay, this is how many contracts you should start with. And when you get to your first target, this is how many you take off as a first partial. This is how many contracts. I have students from 2016 that were paid membership students. They send me emails and they'll say, hi, ICT, thank you so much for everything you're doing. Bada bing, bada boom. I'm really having a hard time. Can you tell me, this is the third time they sent this email over the number of years it's been. Like I somehow forgot. Like I can see their email thread. When they send me an email, it's right there. And they know who they are, and I'm not making fun of you. I'm not saying your names, so don't be embarrassed. But there is no, and I'm telling you openly, there is no recipe that's going to be appropriate for everyone. That's the part that you bring into it. That's your personality.